Okay, good morning, everybody. This is Dennis Wilborn from the Active Trend Traders. Today, David Grandy is in Las Vegas attending a conference, and his partner in crime, Harlan Pyan, is with us. Good morning, Harlan.
Hi, how are you?
And it's always a pleasure to be able to chat with you and also get your perspective of what's going on in the market. And how do you like that action yesterday?
Pretty crazy if you were looking at the headline indexes.
Without a doubt. And some of the, some of the stocks were following suit. But at the same time, hopefully before the day's over, or before this show's over, we'll have a couple of stocks identified for some potential for next week.
Yep.
And folks, I am at a conference today, and so I took time away from the conference just real quick to get out, and so we can do the How to Make Money Trading Stocks. I shot out a informational email to the members of the Active Trend Trading, and so with no further ado, I'm going to get going. We will take some time to look at stocks at the end, so if you have a couple of stocks, but I'm going to have to be very punctual when getting out. I'm attending a really cool school working with my ministry, and it's called the School of Power and Love, and I was it's pretty phenomenal. I want to remind everybody that the materials we present are for training purposes only. Traders should paper trade any new method before they risk their own capital. I want to remind everybody that on October 7th, which is a Tuesday evening, David Grandy and I will be presenting at the Englander Sports Pub for the Bay Area Stocks Options ETF Investor Meeting. And the theme of our discussion that night will be the art of trend trading. And so I know we're really excited about it. And you can contact Bobby Sherman, and here's the website where you can find out more about the Bay Area stock options and ETF investors. As you know that, and just want to remind everybody that we love to talk about stocks. Harlan, hold on, Harlan. Harlan, I think I'm going to have to put your name on this also, because I know you love to talk about stocks too.
Yeah, my wife will tell you I talk way too much about it.
And so, but anyway, we love to talk about stocks. We love to talk about stocks. So please shoot us an email, our emails, or give us a call. You have access to both our phone number and our phone numbers and our emails. Let's start taking a look at what's going on with the market. One of the things that I found very interesting is I'm always putting on the on this page where we were last week, and it's kind of interesting. The market was kind of at its highs last week, or bouncing around, and I made the note. It appeared as if the buyers had won, but whoops, look out below. That's one of the things that it just looked like we're going into a topping type of patterns on the indices. This week, I think I would best describe it in the indices and possibly some of the stocks that you're holding, that it's a week of chaos and possibly disorderly conduct by the stocks that you are the ETFs that you hold. We continue to get those large range days where today, yesterday it was down 200 plus point on the Dow, and who knows, today it may be up 150 points. But typically when that type of wide and loose type of action starts happening, it's trying to tell us that the market's trying to change its character. The S&P I've highlighted, both the S&P and the NASDAQ are working on what I call an expanded top, where you're getting higher highs, but you're also getting a series of lower lows all in the same pattern. And the big question on the Russell are we at support? So some of the influences, both outsides, not a lot of earnings influences going into next week, but we have some extremely oversold conditions A lot of news about the Chinese economy. And then, of course, the wild card for all of us is the aspect of what are the tariffs going to do over this weekend? And how will we and the rest of the world react? Here's one of the charts that I have been very much relying on to help try to pinpoint some of the low spots in the market. As we did a little nibble in TNA this week based on getting into these extreme oversold conditions. As I was sharing with Harlan earlier, this 15.64 that means 15%, 15.64% of the stocks on the NYSE, only 15.64 are above its 20-day moving average. This, I have never seen an extreme this low, and this indicator goes back about 12 years. And so normally, typically, when we get into these extremes down here below the 30 level, there tends to be at least an interim relief rally, or sometimes a significant move. The move here that started at the first part of August, is just a couple of months ago. This ran up almost 10% on the S&P and a significant amount on the NASDAQ. And also the Russell, actually, it did respond with a nice move up, but just not as high, because it tends to be the weak sister. So what are the charts telling us? I want to go just back to that really quick. But based on this, I'm looking for, will the indices hold support? And as we look at a couple of charts here, SPX. I've got the weekly chart on the right, the daily chart on the left. This gives a really good flavor for this expanding top, as we see. Based on, I'm just going to take a real quick look at the weekly chart and then the daily chart. Back here 4 weeks ago, we get a hanging man type pattern, which is a bearish candlestick pattern. And sure enough, it stays basically in place, and it looks like we're getting some resolution to the downside. However, this purple line here is equivalent to the 200-day moving average, or the 100-day moving. I'm sorry, the 100-day moving average. And sure enough, on the S&P, we're starting to roll over. We're closing below the 50. First time that's happened since late in July. But there are numerous levels of support coming down here at the uptrending channel line, where we could get a bounce from any of those areas, or even a bounce off this expanding top. I would look on, anytime you have a pattern like this, folks, is just basically take a look at it, and if it reverses mid-course, in other words, we pop back up here, and then we started back down, and so you would anticipate it to come back down to the bottom of the pattern. But if we get next week a move where it moves back up, stalls, and then starts to fall again, that can be a clue that we do have some more significant downside to happen. But watch for any of that stalling mechanism within the pattern. It tries to rally and then falls back. That may happen in the index, and then we apply that to the leveraged ETFs on the index for potential trades. NASDAQ. Early this morning, NASDAQ, look at this, the 50-day moving average is holding. It too is working within an expanding top. However, the 50, it came almost right to the 50 yesterday, and we're getting a little bit of a bounce. If we close where we are right now, this pattern, this day and this day after this small downtrend, would be considered a bullish harami in candlestick talk. Which typically lends itself to at least an interim price reversal. And but then we do now have the 20-day moving over, rolling over. The 8-day is now below the 20, and all this this wide and loose type activity is showing that, you know, the market is a little bit weak. How far will it go? We've got 39.97 here to 4,000 is kind of a support zone. We drop that, then we're probably looking at the 3,900 level and or the 100-day moving average moving up. Russell. I talked about this Russell several times last week, the Russell in TNA, when it was up in this area, when it was failing up here, and the question was, will it get back to this support zone, which was identified by the 1107 to 1082 level? And sure enough, it has gotten back to that, did a slight rebound, pushed away from it yesterday after the big sell-off, but it appears as if that is a strong support level. So we nibbled a little bit on TNX, or TNA, excuse me, and we've got to stop going back into the support area. But again, today's candlestick, if it closes where it's at and it holds that support, this would be considered a bullish Harami, and we could anticipate potentially a move back up in the at least to the 8 and probably more back around the area of this downtrending line now and or the 1140 level. But that's what I'm seeing kind of in the market, folks. And if you're trading TQQ is a 3-time leverage. It too had a big sell-off yesterday, but it's found that support. And so support here and a rebound back up to the 8 or the 20. From here to here would be about a $3 to $4 move. So that's about 7-8% on a $85 stock. And at the same time, TNA. It too is finding that support and a potential rebound. And again, either up through the 8-day and then hit the 20, or this downtrending level of support based on the new downtrend line. But this was a significant sell-off in TNA. Basically followed the Russell in this significant sell-off. So that's what we've got for the market. And Arlen, are you there?
I'm here.
Okay. I'm going to switch over to you, folks. If you have any questions, please just type them in. Let me see if I do not see. Jesse hasn't joined us yet, Harlan. So.
Oh, I see that.
And here, let me switch over to you.
All right. Let me know if I'm where I'm supposed to be.
Okay. Let's see. There we go. And so I've got it switched. There you go. I see your screen.
Awesome.
And I'm going to mute myself.
Right. Well, you know, Dennis pretty much nailed it on the head. I really like that percentage of stocks above the 20-day or below the 20-day. That just really sets a point as to, you know what, we've seen this before where it's buy the dips and sell the rips, and if you short weakness, you run the risk of getting your face ripped off on the short side. And, you know, and rightfully so when you see some of these stocks have really taken some big dips to the downside. So, but for us, you know, we look at it differently. It's more of an orderly pullback that creates opportunities for us to be able to buy the leading stocks at lower risk alternative entry points. Coming into this month, basically because we saw these big wide range days, and you know it is September, we opted to take it easy, be selective, not put the cart in front of the horse, not load up the truck, just hit and run, pick off a little bit here, a little bit there, all based on trading what we see. And so far we've got some gains locked in of 1150. I think we only did gosh, like 4 or 5 trades tops this month. So so we have been taking it really easy, but this is all good. And you know, from what we see, this is our time because we don't chase stocks. We do let them come to us, and you know what? They are coming to us. And there are a lot of stocks out there that obviously we buy support, and there's a lot that are sitting at support zones and levels. We may not be out of the woods in the short term just yet, but you know what? We're really close. I'm starting to see indicator after indicator after indicator start to say heads up. We could be, you know, set for, you know, at the minimum, even like what Dennis had said with the expanding top, even a dead cat bounce. So we're not at resistance, so we're obviously not going to be shorting anything down here after the fact. We're just going to keep trading what we see, not what we think, not what we hear, and not what we fear. So moving on, let's take a look at the NASDAQ. When we look at it, we drew a trend channel slope change in dark green. Currently, it looks like we're below the bright green and the 50-day moving average on the NASDAQ, but you know what? We did this before in August, as shown by the red circle. And look what it led to. A lot of tree shaking going on down there. And tree shaking shakes out the weak hands. So, and it also changes the sentiment from bullish to bearish, which is good for you contrarian folks. By the same token, you know, look at the August lows, look at the October lows, and even the April lows at the bottom of the chart. See the full stochastics in the green circles? If Dennis were to pull up that 20-day chart, sorry. If Dennis were to pull up that 20-day chart again, you would see that the full stochastics match with what he's showing as extreme levels on the low side, and you can kind of see that we're also, one could say, trend channel supports. So that's all good stuff. And the same thing with the S&P. You know, it's locked in a trend channel. It's not that much lower than the 50-day here, and it too is getting in the level of oversold. So here's our centering statement. Uptrends, how to trade them. That's one of the only 3 things you need to know, and that's where we're focused on right now. Downtrends, how to trade them. Not really seeing them. And change in trend patterns and how to trade those too. We're starting to see a few names come up off the lows. Some of the oil and energy stocks look to be tagging their 50-day moving averages. But, you know, or excuse me, 200-day moving averages. Moving on, the best one, they are definitely the ones that are in clearly defined uptrends. They're above the 50-day moving average, and you have a orderly pullback versus this all over the place craziness type of patterns that show pullbacks, but they're just wide and loose. So we like the ones that are the most orderly. Trend channels. This is one of the greatest tools that that we like to use, and you're going to see why in the next chart, because it also shows you when to get out of a stock that's been on a run. Plus, it shows you how to buy at support. Not to mention, it helps keep you centered and manage the overall trend and smooth out the volatility that we've been seeing in the indexes. So that's why we like to use them, and whenever we can see them, we definitely throw them on a chart. Take a look at this chart. With regards to trend channels, we see White Wave Foods broke out of a base back in August, ran up nice, but see the green trend channel? It was in a nice, clearly defined uptrend channel until you see how every single time on the way up it would peg trend channel resistance. So when you look at it, it got up to 38. You could see that was a great time to sell this stock because it was at trend channel resistance. The market was starting to get really dicey around that time. So what better time to lock your gains, walk away, and sure enough, look where it's at now. It's pulling right back to the 38% Fibonacci retracement. Who knows, maybe it stabilizes here, but even if it doesn't, your risk is limited because right below it, there's the 50-day moving or 50% Fibonacci retracement. the 50-day moving average, and old support, or excuse me, old resistance once broken tends to become new support. So those three levels limit your downside. So this is a name that's on our list. Ultimately, I would love nothing better to see this thing have a day or two of in the face of fear and get slammed down to the 50% and the 50-day moving average. That would be a great time to pick this thing off. So, but in the meantime, it's trying to stabilize right here. Moving on. Excellent. We like to buy these stocks that are market leaders, that we don't have to chase them. BITA is one that, you know, it got extended. Heck, it hit dang near 100 when the 50-day at that moment in time was right around 65. So you knew it was extremely extended. You knew it needed time. And here it is. It's made an orderly pullback over the course of a year. And look where it just happened to stall, right at the 50-day moving average. And here it is getting a lift off of it. So that's one name we own. And as long as it's above the blue line, we're going to stick with it. And, you know, who knows where it's going to go. Retest at a high sure would be nice, but, you know, I'm not going to go there, because if it doesn't go there, I don't want to become mentally attached and end up missing out on the stock as it rolls over when it could elect my gains. So moving on. So what are we going to do? We're going to let our stocks tell us what to do by the action they exhibit versus watching these indexes just go all over the place on a daily basis. We like to let the market reset the pins, which when you look under the surface, there are a lot of stocks that have been doing this. They've been setting up the pins, all the while the indexes have been chewing around and chopping you around and forcing your attention to be on that volatility when underneath the surface, guess what? There's a lot of stuff setting up. So it's a market of stocks. Right now, we're looking at a 15-day free trial. If you haven't taken it, you probably should. We're coming into that magical time of the year when the markets do bottom out, and they usually do sometime September or October. Historically, that fourth quarter have been really great months, and they typically run you into the end of the year. Are they going to do it this year? I don't know. But I don't need to know. All we do is we just buy support, and one of three things are going to happen. We're going to get a gain, we're going to wash, or we're going to get a loss. But when you see high probability patterns like we're seeing, you got to stand up and take notice of that. So there you have it, Dennis. I'm all done.
Harlan, thanks. I'm a little bit sleep deprived right now, so I wasn't taking a nap.
I thought I was lost there.
No, I wasn't taking a nap, but so if I'm just gonna, it's those energy drink, you know, those little like those 5-hour energy drinks. They're,
okay.
They keep you going, you know. No,
yeah, they do.
I'm only kidding. So one of the things that's really remarkable, Harlan, that I find very interesting, because clearly the all about trend system and the active trend trading system are different. I mean, slightly, there has some differences, and I watch different things than you guys watch. I'm a big moving average kind of guy, and all that kind of stuff. But what I find very interesting is on the stocks that we watch, the convergence of clues that I'm looking for based on moving averages oftentimes line up almost directly with your trend channels and some of the other areas of support and resistance that you guys are watching. And so it's very confirming that
right. The more bullet points you have for a reason to step up to the plate, the better.
Yeah, without a doubt. So
when you can sit there and line up, boom, 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 you've got 7 or 8, 9, 10 reasons, why you want to lean towards one side or the other. That also helps you.
Yeah.
So, and we do it all based on what we're seeing. In addition to what you said about, we're similar but we're different. That's really a great statement, because I didn't see this expanding top that you saw. So, so I don't have a monopoly on all the good ideas, and neither does Dennis, and neither does anybody else out there. But what's nice is some things that I'll miss, Dennis will pick up, and some things that Dennis misses, I'll pick up, and vice versa. And even a lot of our subscribers say, hey, did you see this? And I'm like, no, I didn't see that. Wow, thanks for bringing that to my attention. So
exactly.
One big happy family, if you want to call it that.
Exactly. And so, okay, folks. Yeah, somebody mentioned we're getting a little bit of reverb, and that's part of technology, guys. And sometimes it's our bandwidth. We have plenty of bandwidth and all that kind of stuff. But I will finish up here. And the active trend trading system basically is, and David, you mentioned that they're getting reverb. Are you getting reverb now? Okay. Active trend trading system we show and teach our members how to trade any market conditions, what to trade, when to enter, when to exit, what strategies to use, and then what to expect. We're very pleased with how we've been doing. Since we started our timing service back the first part of June, here are the profits we've taken off the table. We're currently sitting at about 28% invested. We do have a small half position in TNA, and we're doing a demonstration income generating trade with Tesla. Profits so far for September, income generating, we've been getting a lot of little base hits. We've generated $3,600 in income generating, $1,500 in capital growth for about $5,000 for the month of September. I will be posting this to the website, what we're currently in, what trades we've closed out. So far for this year, even though we took a little bit of a hit on one of our Tesla trades, we covered most of that with some covered call trades with Tesla, because we were able to double dip the covered call, weekly covered call this week. And so our margin count's up 27%, our average account is up 44%, and those are winning percentages. The reason why there's a difference in the margin account is because earlier in the year, up until we started the timing process, we were using that margin account for testing out various other things we were looking at. But rather than re-zeroing out the account, we just let it ride. It had about a $10,000. I will, Mark. We had about a $10,000 profit in that account prior to when we switched over to the timing service. Some of the other things that are coming downstream or upstream for the active trend trading system. System refinements for longer horizon trading. We've got some of those coming online. I've got a guy doing some back testing right now, Mike Traeger, my research partner. And then our Power ETF strategies are coming online, our training courses for beginners. And over the next 2 weeks, between now and October 15th, we'll have a big announcement on our upcoming mentoring offering that we'll be doing. And so, and we will have some other stuff that we're going to do. So folks, that basically concludes. We're going to start looking at a few stocks. Harlan, I'm going to go back to you, and there we go. Harlan, you got any last comments for the recording?
No, I think we pretty well summed it up, and I think that the biggest thing is try not to allow yourself to get sucked into these big swings in the indexes.
Yeah.
And just pay attention to what your stocks are doing versus what your emotions are screaming at you about.
Yeah, one thing I'm finding, and I want to pass this on to you guys, Harlan, and everybody who's listening, is what I've been noticing here of late. The price actions have been really obeying the moving averages. So, in other words, if we break down through the 8 and the 20-day moving average, the prices have been going to the 50, which we expect that to happen. But then it's respecting the 50 and bouncing up. And so there's been a lot of, and when it bounces back up, where does it go? Back to the 20 or the 8, and then bounces down. And so you can, we're going to, in our webinar this coming Wednesday night for our training webinar, we're going to be talking about strategic planning of your trades and how to simplify your trading routine. So with that, I want everybody to have a great weekend. Keep growing the egg and trade, and for both Harlan and myself, trade wisely, trade profitably, and thanks for joining us today.